All right, what's up, guys? We had a thunderstorm rolling in, so hopefully the power stays on the whole time. If in any case the power shuts off or anything like that, I got my phone handy dandy right next to me, and if I'm in a position, which is like every trader's worst fear, is the power going off while you're in a position. Pull up your phone, go to the TD Ameritrade app, and close it out. But to get to that app is like at least 10-15 seconds. Within that 10-15 second window, you could be taking a big loss. But anyways, we got VANI looking juicy. This one made a move from $1 to $5 already pre-market. We had a nice breakout here over 375, ripping up to about 499. 1 minute pullback, continuation potentially over 5. Looks like it could be a bit extended, so this breakout may not be a good entry. It really depends if the market is strong today. Yesterday the market was on the weaker side. I didn't do actually I did do a recap, but I did it on my phone. It was more like a vlog style recap because I didn't really trade much on I didn't really do any good trading yesterday because there was really nothing. I was only up like $80, and I just did like a quick recap on the way back from the gym. But the phone, I guess, recorded my video sideways, so I just didn't even post it. And I tried to rotate it, and the quality was still bad. Anyways, VANI had that break of 5. Now we're ripping up to 580. Crazy. 80 cents here in about 10 seconds. Quick micro pullback. Maybe you get some continuation. I hope your pre-market traders are killing it here on VANI. From $1 up to $6 now. So it looks like we could be having some momentum today, which is great. I'd love to see something already up 488%, almost 500%. Let's see if we get the break of 6 and break of 6. And I'm not trading this. I'm actually not a pre-market trader. My strategy is significantly underperforms or doesn't perform pre-market. I can trade pre-market, but my profit margin is less than 10%. And I like to save my orders since I can only take 390 orders on average per day. I like to save those orders when my strategy is performing the best, and that is using market orders after 9:30. So, some of you guys may coming in today and be like, why are you not trading this stock that's going from 360 up to 662 and just made a 100% move? And that's because my strategy, even if you get this kind of move, my strategy still does not perform. My risk management, it's usually the risk management side of my strategy with limit orders, is not as tight as market orders. And so in turn, I'm not able to manage my risk as well, and I take bigger losses. But I'm sure this is going to set up here at the open. And really, you only need to nail one setup and you have a great day. But it looks like this is a blue sky setup. We can go through all the technicals. So this is a blue sky setup, which means that we're breaking all-time highs in the chart on everything. You look past on the chart as far as possible, and we're already breaking over all-time highs. The all-time high was at $4.20. We're up about $6. So blue sky setup, which is good because on a blue sky setup, there's limited overhead resistance. There's no previous price action history at these levels, so there's nobody bag holding from a higher price. And when you have a stock that has a lot of bag holders on it from a higher price, you could be getting resistance on the move up. But since there's no one holding from a higher price, nobody's dumping the shares. Everybody's in profit who are long on this stock. And when everyone's in profit, you know, human emotion, when everyone's making money, they want to make more money. And so they buy more, they get more aggressive. And that's why you see blue sky setups being very strong. We can take a look at the float on this one. But the daily chart is A+. I love the daily chart. Let me post my my live stream link here, just so everyone can get in on the Discord. This could be a 9 EMA bounce. However, it's still extended, so it is a little risky. So you want to keep the risk tight, which is tough to do pre-market, which is why I don't trade pre-market. Maybe eventually, if I get it, I need to get a stronger computer. I need like a 32 gigabyte RAM computer if I want to live stream and trade. I tried live trading and live streaming. My computer's like maxed out when I do that. So that's another reason why I don't live stream at the open, but I would do it when I get a better computer. Let me just post this here in the Discord. Everyone. By the way, the Discord link will be in the description for you guys who want to get involved in the chat. But beautiful 9 EMA bounce. If you could have timed that bottom, you know, it could be a very decent trade here. Maybe you'd be up about 50 cents. I would take that off the table. You know, that's a 10% bounce right there. Let's see, let's take a look at the 5 minute. So 5 minute, you know, closing near the highs, bottoming and tail on the next candle. We could get continuation, but we are very extended off of this previous 9 EMA support. So again, that's your risk of its rejecting off the highs here. This is going to be interesting at the open. Definitely going to be interesting at the open. I think we're going to get some profit taking. My thesis is we're going to get profit taking at the open and then a curl for an attempt red to green. Yeah, so if I had the 32 gigabyte RAM computer, I would be live streaming at the open. And you guys can see my live trades, but I just don't want to put that much pressure on my computer with trading, because sometimes it'll interfere with the fills, the speed of the fills. And with trading, you need to be, as soon as you hit that buy button, you need to immediately get filled, because if it's a 1 second or 2 second delay, it can completely screw up your strategy. But let's go through the dilution tracker. So if you go to dilutiontracker.com, this is a great site. We've been reviewing stocks on this dilution tracker for a while now. But you can just look up any stock and it shows you all the details. You can sign up for free, not free trial, but you can just make an account. The free trial might make you put in a credit card or something like that. But with just to sign up your account, you can look at the float. So this is a larger float stock, 47 million. So with the 47 million share stock, you know, I like to look at stocks with floats under 20 million. With the 47 million shares float, it means that there's a lot more supply on the market, so it's going to need a lot more volume to push the stock to make the same move that a 10 million share float would make. So looks like the volume is already sustaining a great move. We're getting close to 750,000 to 1 million candles, 1 million volume candles. Which is great pre-market. Usually you only see about 100,000. So this could be signs that there is institutional buyers, and that could definitely provide a lot of liquidity and a lot of opportunity on this stock, because I know VKTX yesterday was a grinder, and I usually don't trade this, but since the volume was so good on the day, this is also a sign that institutions are actively trading this, so it can provide a lot of opportunity you're on the right side of the trade. And that's usually how we'll see those larger float stocks make moves, is when those institutional traders are trading it, because this is a $70 stock. You know, I can't push a stock $70. Retail traders can't influence this stock. And with the larger supply, you know, retail traders can't move the stock. It's going to be institutional traders who have boatloads of money. And if you can get on the right side of their trades, then you're going to be the one in the money as well. You're going to be riding the current. So, you know, VANI, larger float, so it may move a little bit different. You may need to be a little bit more patient with the breakouts, because it needs to churn a lot more shares to make the same move than a small cap would make. But anyways, let's go through the dilution tracker. This is very good to understand your potential dilution risk. So what you should know is that all of these small caps, what they like to do is they like to perform reverse splits and increase their stock price and lower their supply of shares on the market, and then dilute their shares even more, so sell more shares on the market. And that also dilutes the price, which traps a lot of the long traders and retail traders. And that funds their business. And then once the stock price goes low enough, again, back under $1, it needs to do another reverse split to maintain the regulations with the market. And so it'll perform another reverse split, take the price from 75 cents all the way back up to $4 or $5, and then it'll give out news to the market to attract buyers and attract volume, and then it'll dilute into those retail traders again to raise more money. And that's how these small caps operate. So you always want to be careful of getting caught in any of those dilutions. You don't want to be getting caught in an offering or anything like that. So this is a great site to understand if you are potentially at risk to getting caught in any offering on any stocks that you're trading. So first we can go through warrants. So warrants are like option to, it's kind of like an option, but so if you own a warrant, you can only exercise a warrant, which pretty much is a share, an exercise to buy the share at $35. So let's say I have one warrant and the exercise price is $35. I can't exercise my warrant until the price is over $35, and I will pay a fee of $35 to own the stock at that price. Well, I'll pay $35 to own that stock at that price. And if the stock is at $40, I'm immediately $5 in the money. So that's why warrants are risky if the price is going up to that $35 level, is because people who are owning the warrants, let's say the 2 million warrants outstanding, they're going to be looking to exercise those warrants and be immediately in the money and maybe selling for an immediate profit. So your exercise price is $35. We're not probably going to make it to $35 today. If we do, that'll be insane. But we're at $6 right now, so we don't have to worry about the warrants. But we do have shelf offerings. So this is another option for companies to raise capital, pretty much just selling shares onto the market. So, we do have that potential offering risk or shelf offering risk, but this has been registered since 2021, so not sure the chances of it happening today. And usually they don't perform offerings early in the morning. Like sometimes they do a pre-market, but right at 9:30. I haven't really seen many offerings like at 9:30 or 10 o'clock. I would assume because when a company publishes news, they want to allow the opportunity for the price to rise further. So why would a company send out news just to immediately 30 minutes later just dilute the share price? They actually wanted to give it maybe a day or two to see if the price is going to rise even further, because they want to get the most amount of bang for their buck. They don't want to squander their momentum too early. So the chances of an offering immediately after the news is unlikely, but I guess it's always possible. What if it says price, it's already priced, it's already happened? Yeah, so if it says price, that means it's already happened. If it says registered, that means they can that means that they can, let's see here, they can offer it at any time. And then sometimes it'll say not yet registered. If it says not yet registered, that means they can't do the offering yet. But anyways, looks like we're holding a consolidation high here. You got your classic bull flag. We are very extended though in the 5 minutes, so it'd be risky to buy high on this. Unless we're in an extremely hot market and it's a lower float, but this is a larger float, so we may have a lot of supply. We may need to dip down here before we get the attempt. And what that does is it gets traders on the wrong side of the trade, because shorts, you have to be thinking, okay, where are shorts getting in? Shorts want to get in for the breakdown. So they get in for the breakdown, and let's say we break down and then we curl back up. Where's their stop? Where's the short stop? The stop is their entry, at least their entry price, if not sooner, or if not maybe 5 cents after. So maybe they put their stop at max $6.20. Once we hit $6.20, you'll find that we'll have a lot of demand from those shorts covering through, and then we'll push up through. It'll cause that fuel to push it up through the high. And you'll also have longs jumping in as well. My gosh, what is this? So let's see, it looks like we're pushing up here. If we're going to close high, let's see, we're going to close higher, we're going to form a topping tail. Looks like we're forming that topping tail. And we're going to break down. We should break down here. All right, this could be shorts. This could be the entry for the shorts. So you have that topping tail, rejection candle, volume kind of increasing for the break of the upper end. But it looks like there's also support as well. It looks like longs are fighting. We might not see it until the open. If we start pushing the top of this candle, this is again could be another trade. The entry would be the break of this topping tail, which would stop out shorts at 6:30. Yeah, a lot of it is not only the chart pattern. The chart pattern is one element, but it's also psychology of who, where are longs going to get in and where are shorts going to stop out, where are shorts going to start their position, where are longs going to stop out, and you don't want to be the last one. You don't want to be the last one to figure it out. You don't want to be the last one to figure out that it was a buy. If you're the last one to figure out that it was a buy signal, then you're going to be getting out when everyone else is selling. And if you're the last one to figure out that it was an exit signal, you're going to be the one bag holding on a flush. So there's a lot of things to take into account, not just chart pattern, but also psychology. I'm going to expect here we're going to get a sell-off. We're very extended. We just made a move from $1.25 all the way up to $6. I'm going to want to see at least a test of $5 450 or 450 is a little bit pretty low. I would say $5. If we can hold $5, we potentially may see the red to green move, which is one of my favorite setups. And again, it is blue sky, so yeah, getting a lot of reps shorting will help you understand long and heavy spending time shorting a lot. I would short more, but Thinkorswim does not allow shorting on a lot of these really risky low floats. So let's see if this one you can go short. Let me just try. Yeah, so it looks like I can't short this. You know, if I could short on more names, I would probably be more active short, but I don't really short that much. Plus, it is risky, man. It is really risky. If you get caught in a halt up, you know, the price can resume as high as it wants. And we've seen stocks halt up at $16 and resume at $500. So in that case, you can lose more than your account balance, and your broker is going to be sending you to collections to collect their $400,000 payment that you owe them, and you're going to be pretty much out of, you know, your retirement. So that's another reason why I don't short. It's just so risky. It's like, I would rather know that the most I can ever lose is the amount that I have in the position, and that's going long. If you're going short, you can lose more than you have in your position, the more than you have in your account, more than you own, more than your net worth. You know, you can lose infinite amount of money going short. So, you know, the risk to reward is just not there. Even if it's a 0.0001 chance of that happening, you know, just the chance of it happening is just like too much. It's too much. So that's why I only long. Another one was IXHL. This one I don't like because, you know, we made a nice move, but we gave back most of the gains. We're consolidating under VWAP or consolidating lower. We may get a move to retest, you know, VWAP, but do I think this is going back to the highs? Probably not. Volume is fading. Just the chart pattern is just very bearish. Who knows why this is moving? Has no news, but it is a low float. The float is under 1 million shares, so there's less than 1 million shares in the market to be traded. So, you know, this could move very volatile, and it could give opportunity just because of that low float. So it just kind of attracts a lot of traders. When traders wake up and see something that has a float less than 1 million, they're like, okay, this could be a potential, because stocks under 1 million share float, they can fly. They can skip dollars a share. So, you know, this is going to be potential. However, again, it's very risky. You know, it's very risky, especially with that low float. You know, you can turn a million shares like that, and if you can turn a million shares like that, you know, you can rip up real fast and you can flush real fast. So I'm going to be mainly watching VANI. We got about 45 seconds to the bell. I'm going to be looking for probably a dip and rip setup. Hopefully you guys get green today. Good luck. Stay disciplined. Stay calm, cool, and collected. And if we decide to see some more momentum on VANI, it should be a pretty good day. But, you know, again, I'm not expecting anything. And, you know, I'm just going to take it as it comes. It is a little bit larger float, so who knows how it's going to act at the open. But good luck, and I'll catch you guys